Hi, everyone. Today I'm joined by two incredible guests, Lotti, partner at Emergence Capital, and Shanthi, the founder of CEO of Casap. We have both the investor and the founder perspective in one room. Lotti, Shanthi, welcome and nice to have you
Thank you.
in this episode of podcast. Lotti, I would love to start the conversation with you. I made a few notes for myself from investor perspective. How would you describe the current fintech funding climate? What's actually driving the recent change in the market? Because we saw some incredible numbers. One example is Ramp raising 500 million. And also we saw a couple of IPOs such as Circle and then Chime, also Klarna. Please share your thoughts.
Yeah, it feels fintech this year became very cool again after a few years of maybe a little bit of a fintech winter that was prolonged, and we were all kind of waiting for it to end. I think it's kind of two things that we might have to decouple. The first is the and there's no mistake, there's no doubt that the quality of the fintech products that are being built in this new era of AI is just superior to what the previous era was able to provide, especially as an end consumer, right? Like what
Right.
AI allows, it's a level of personalization, a level of customization, and really kind of providing these wow moments that were just really hard to do before. So
Yeah.
that's kind of the first more technological shift. The second, which we have to talk about, is just the more general exuberance and macro in technology more broadly. The rounds that you have mentioned, including the ramp one and a few and many other ones,
Yeah.
particularly on the private side. We can talk about IPOs maybe after, but that exuberance exists in a number of sectors outside of fintech. I invest primarily in B2B software. A lot of it is in fintech. Some of it is outside of fintech. And I can tell you
Okay.
for a fact that it's just been, the gap between valuations and traction, the amount of capital pouring into the environment because of AI is just higher than ever
Right.
before. So it's kind of these two compounding factors that get us to see some of those really eye popping funding rounds
Mm.
from early stage all the way to late stage.
Yeah, I believe so because in their latest product launch, Ramp also mentioned that how actively they are automating finance or the job of finance team using AI, and definitely it was one of the reasons why they were able to raise such a huge amount of money in such a huge valuations. Shanti, by the way, congratulations on closing Series A. How do you feel about the current fintech climate? And like, what do you think is different from last 18 to 24 months?
Yeah, no, thank you. And huge thanks to Lottie because she led that round. No, but when we started KSAP, we started, I'd say, in the fintech winter, right? The proverbial fintech
Sure.
winter that we're all talking about. It was, February of 2023 that we started the company. We actually incorporated and raised our pre-seed in December 2022. But 2022, you ask anyone, they're like, funding dried up. People are
Yeah.
trying to extensions. There was, it was almost like in that period of time, it would be hard to even imagine any of the companies that have changed how we do day-to-day things, Uber, Airbnb,
Yeah.
none of them would have been funded in that environment. Like there were seed stage investors looking for like late stage conviction, right? Late stage numbers. And now we see that opposite again. And
Yeah.
I got to experience both, right? And in fact, I
Okay.
think it's made the companies, in my opinion, and I'm biased because I started my company in this time, the company started in this time had to go through a very rigorous process of evaluation and conviction that this is even a company that needs to exist and this is a market that's big enough. And I feel
Right.
like the companies that kind of came through, kind of like in that cockroach mode, are now set to succeed with this kind of renewed optimism, right? So I
Right.
definitely see that too. I think for us, my approach to fundraising has always been not to focus on it. Like in the opinion that if we focus on building a really great business that has
Okay.
room to be a generational company, then the money will
Okay.
be there, whether it's a winter or a summer or a spring. But it's definitely been nice that, someone like Lotti conviction and us as a team in the problem that we're solving and in the technology that we put together actually has, Yeah, I think a lot of support even internally in her firm to support companies like us.
So basically, the idea is focus on building the product itself and the money will come, right? So focus on
Focus
product
on
and maybe track.
I will say and you and I are both fellow PMs. It is focus on product, but focus on getting the customer validation along with the product. Like focus on getting the commitment and the excitement and the product market pull, right? Not just fit
Okay.
of, oh, I gave you this and now you want it. It's we are getting customers that weren't originally looking to solve the problem that we're solving,
Mm-hmm.
but we're showing them a completely different way of solving it that couldn't have
Okay.
existed before agentic AI, right? And like
Yeah.
I think that focusing on the customer pull is what makes it so that you're always a fundable company.
Got
Yeah,
it. Now that totally makes sense.
if I can add,
Please go.
that is internally at Emergence, we call it the market sucking sound. Like when
Okay.
someone that's typically not an enthusiastic buyer of anything,
Okay.
that person all of a sudden becomes enthusiastic about buying
Mm-hmm.
new product X. That's where you want to really pay attention to. And in fintech in particular, which is full
Okay.
of risk averse buyers, where generally they're not that open to taking new risks. They're not open to, letting a startup move fast and break things and tolerate mistakes. When that buyer all of a sudden does decide to take a risk on an early stage startup for something very core of what they do,
Mm.
that is a pretty great sign of product market fit, especially if coupled with a strong ACV, especially when
Yeah.
coupled with real dollars that they put at work that are not
Yeah.
pilots. They're
Right.
real
Right.
dollars, real budget, ongoing. And that's for an early stage investor like me, that's really what we look for.
Okay. So basically, when you say real dollar, you said not pilot, but the real dollar, it means some real traction. Let's say the customer is with you for some period of time, 3 to 6 months. Do I understand it correctly?
Yeah. And there's
Okay.
a few things. So one thing is traction, right? And at the early
Yeah.
stage, especially for a company that sells to other companies, so for a B2B
Yeah.
company, you're not going to have 1,000 customers. You're going to have a small
No,
handful,
absolutely not.
right? So
Yeah.
you can talk to all of them as an
Okay.
investor. You can
Yeah.
hear the delight in their voice. You can hear things
All
like, if
right.
you take this away from me, I cannot do my job anymore. If you take this away
Okay.
from me, I will go to my boss and argue for
Mm.
more budget because I can't imagine living without this product. These are the qualitative more than quantitative signs that indicate, okay, this company has really strong product market fit.
No, I really appreciate this insight. Why? Because I have also aspiration of building a fintech company. So this is a media venture, Fintech Capital. A Fintech Wrap Up is a media venture that I am doing, but in the back of my head, I have a fintech idea which I always wanted to build. Again, it's also at the intersection of AI and fintech, and I really appreciate your these insights that you are giving me because they will be very, very helpful for me too. So we are talking now about the AI and fintechs. Guys, is it AI that's driving the whole valuations and fundraising, or do we see like embedded finance or banking as a service or other categories also raising funding? How do you see it?
So I think AI really is the center, and it manifests in two ways. It can
Okay.
either be AI applied internally, so the problem that you're looking to solve all of a sudden is cheaper and faster to solve because you don't need 100 people that are
Right.
in the back doing the thing,
Right.
but you have internal AI agents or LLMs that are able to very elegantly and very fast um,
Okay.
get the job done. That's option number one. Option number two is
All
something that's
right.
more customer facing, right?
All
So
right.
option number two is AI that the customer can see.
Mm-hmm.
And
Mm-hmm.
I think both of these are really much supporting the
Mm-hmm.
the the wave that we're seeing in fintech. The things that you're mentioning, embedded, banking as a service, these are things that have been around for a long time.
Yeah.
And
Yeah.
it's been tough. It's not like these are categories that took off all of a sudden. They went through the
Exactly.
winters and summers and winters again. And so I don't
Exactly.
think anything fundamentally changed there. It's
All
more
right.
the technological enablement that allows
Here,
for these problems to be solved.
here's the question. does it mean that in that case, if I just put the sign AI to my fintech company, it would attract more funding, even though it's not clear if that is a really AI driven change or not? Because it seems to me everyone just putting AI sign to whatever exists, even in fintech, and saying like we are AI powered company, give us the money. Is it true, or do you guys are you guys when investing, you look at fundamentals, you look at the numbers, as you mentioned, you speak to the customers to understand if this company is really solving the problem or not?
So I can't speak for the whole venture industry. I can speak for
Okay.
myself.
Okay.
Wink, wink. Um,
All right.
so we are very fundamentally driven. Like we will
Okay.
look at all the fundamentals. I spoke to Shanti's customers at the length to really
Okay.
understand how they were how they were getting the job done, both
Yeah.
customer facing, but also internally. At Emergence, because we don't invest in very many companies per year, we're fairly focused. It's typically only a small handful. We
Sure.
get to go very deep. If you're going
Okay.
very broad, if you're a high volume sort of venture fund, it's harder to have the sort of diligence and conviction in one specific
Exactly.
opportunity. And so yeah, maybe it's easier to just say, okay, this is AI, it's an area that kind of makes sense, let's just go with it.
Sure.
I will say that it's pretty common at the beginning to do things that don't scale. So I don't
Okay.
want to just say, oh, because they haven't built the full automated AI from the beginning, they're pretending to be AI. It's
Mm-hmm.
totally
Mm-hmm.
normal at the beginning to have a human in the loop, for example, that helps train the
Okay.
model. Then eventually you get to full automation with the level of precision that
Sure.
you need. But at the beginning, seed series A, that almost never happens.
Okay. Got it.
But yeah, if
Got
you're
it.
thinking about starting a company in fintech, adding AI in there will probably help you raise quite a bit more money.
Okay, no, that's very helpful. That's very helpful. Shanti, you are also at the intersection of AI and payments. Can you please tell me more about Casap and what problems you guys are solving for your customers?
Yeah, no, absolutely. So Casap, we automate disputes, right? And it sounds very simple, but when you think about a
Okay.
dispute, someone being like, wait, what? I didn't buy $2,000. Like, I didn't buy a $2,000 TV from Best Buy. This wasn't me. I'm freaking out. I have
Okay.
rent due at the end of the month. I needed my money back like yesterday, right? And like
Sure.
when we think about what we actually provide at Casap, it's actually financial peace of mind, right? It's peace of
Right.
mind to both the institution and that end customer that, hey, if
Mm-hmm.
something happens, right? If there's a
Mm-hmm.
transaction that isn't you, or if you, this is
Okay.
a true story. Someone like, it was actually so funny. Someone ordered a $2,000 couch off of a TikTok shop and they get it a
Okay.
few weeks later and it fits like a Barbie doll, right? Like that. In that situation, someone's freaking out. And they're like, what? This was misadvertisement, right? So it's these situations where, when you think about it, these folks need peace of mind. They need to know that
Right.
they're bank. And
Correct.
today, the state of the union today is on average, it takes 90 days to resolve a dispute like that.
Wow.
And more often
Yeah.
than not, banks are giving people money and then clawing it back at the end of those
Mm-hmm.
90 days. And that entire
Mm-hmm.
90 days, no one knows what's going on, mainly because this is an outsourced process or a very manual process, right? And that
Okay.
using 14 different tools, and it's really hard for people to figure out. What we figured out, and you asked about the question of, how do we intersect AI with all of this, is
Yeah.
agentic AI has now made it possible to take really messy narratives like someone, you know, like word vomiting in a 15-minute phone call, what's going on and why they totally thought they were buying a human-sized couch on a TikTok shop. It's able to take this narrative and make sense of it really quickly and
Okay.
also cross-check it with all of these different details to really figure out at the end of the day, okay, Shanti's telling the truth. Let's give her money
Mm-hmm.
back, resolve her case quickly. Oh, but maybe Lotti isn't telling the truth and we're not going to lose money to her. So at the end of the day, yes, we're a disputes automation platform, but we
Okay.
leverage agentic AI to quickly resolve disputes for honest people.
Okay, makes sense. Can you tell me, please, do you still have a human in the loop, or like in certain use cases, it's fully AI doing everything?
That's a good question. So the
Right.
important thing to think about in payments, and you know this too, given that you spent so much
Yeah.
time in payments and product,
Yeah.
is there's regulations, right? So when you think
Of
about
course.
dispute, there are two regulations that govern disputes in this country, which is Reg E and Reg Z. And
Okay.
when you think about the spirit of these rules, these are consumer protection rules. So these rules are saying, hey, bank, if someone comes to you saying that they got tricked by this TikTok shop that sold them a human-sized couch, or
Yeah.
their card gets, taken over, That's on
Yeah.
you. Make sure that that customer is made whole. And you need to have like completely conclusive evidence if you're going to deny this claim. Oh, and by the way, you have to do all of this in 10 business days, right?
Yeah.
And
Yeah.
given that this is the spirit of the rule, to answer your question, the rules, the government is never going to get mad at an AI being automatically generous. They're never going to get
Right.
mad at me as a bank giving Lotti money, even if she might
Mm-hmm.
not be telling full truths, but they'll get very, very pissed if my AI
Mm-hmm.
automatically denies Lotti or automatically
Yeah.
denies who is telling the truth, right? So
Yeah.
from that perspective, by design, always have a human in the loop when denying a
Okay.
claim, because that's what
Okay.
keeps us compliant. That's what gives everyone peace of mind, right? The government, the bank, and the customer. But when it comes to being automatically generous, we have a completely autonomous end-to-end sort of crediting, right, resolution, a crediting use case where it's like, okay, we have a very high conviction that Shanti's telling the truth. All of her details match with what we're seeing on the network, and we have all the evidence we need to win this chargeback. Let's give her the money, move on. And now we just gave her that Amex type experience that has her
Right.
trusting me and paying for life.
Right. No, thank you for explaining. That's very, very helpful, actually. And Lotte, you mentioned that you do basically check AI readiness or evaluate how AI is being used in the product itself. Can you please tell me what helps you to separate substance from the AI noise? You already mentioned a couple of them. You said like you speak to the customers of that company, but what other metrics do you look at? For example, when you were assessing Casap, how did you do it?
Yeah. So there's a couple of different layers, and it's also, I have to say, the approach that we use depends on the stage of the company, right? You have different
Okay.
expectations depending if a company is at the seed stage. Like when I met Shanti, I think there were 6 or 7 people working,
Okay.
and so that's very
Quite
different
early
than
stage.
if you're assessing a Series C company with a team of 30 engineers that are building the AI day in, day
Sure.
out. So
Sure.
that is kind of the framing. We do 2 things. First, we speak to
Okay.
customers, and as I said, we go through hour-long interviews with various people, both buyers and users, because often these
Okay.
two will have kind of different perspectives and different level. They care about different things, and they
Okay.
can help shed the light on different parts of the journey. We spoke with people when I was doing the diligence on Casap. We spoke with people that are on the front line, that are working at the
Mm-hmm.
banks, credit
Mm-hmm.
unions, and are there kind of picking up the phone and responding to the members that call concerned with like, this was not my charge. And so understanding what is the AI required by them,
Okay.
it's where we start. And we compare
All
that
right.
with the product roadmap that the company is looking to build out, and we make sure that those 2 match. That's step number 1. Step number
Mm-hmm.
2, we go a little bit deeper on the actual technical side, and we have a
Okay.
few people on the team that can ask the right question and can make sure that the architecture on which the company is
Okay.
being built is appropriate, both for the stage that they're at, but also that they have plans for the architecture to scale once,
Mm-hmm.
hopefully soon, they get their volume to increase by 5, 10, 100x. And,
Okay.
when companies grow that fast, and we're seeing that with Casap right now, the architecture needs to hold so that you don't have to refactor the code base every single, quarter. You don't have to reinvent the wheel every single time. You want to build something that lasts. And
Okay.
it goes back, like, why is that? Both because it's
Mm-hmm.
the fastest way to grow, but in fintech
Sure.
in particular, you can't get these products to break. You can't have it.
Right.
Can't
You are dealing with money.
if a credit union is trusting Shanti and her team to handle her disputes, it's not like the product can go offline for 48 hours.
Absolutely.
And so it's the
Absolutely.
higher bar, that needs to be
I
clear.
understand. Right. No, Shanti, look, a while ago, I also tried to raise fund. Of course, I tried to raise proceed because it was a very early stage. It's still a very early stage, by the way. But for the founders who are raising seed and series A, what recommendations would you give? What should they get right to correctly present their product to the potential investors?
Yeah, no, it's a good question. I think, I've always anchored on like what needs to be true for me to
Okay.
spend my time working on a company. And I actually think that might sometimes, for me personally, that might be even a higher bar than a pre-seed
Right.
investor. And When I
Right.
was before starting Casap, I had spent 6 years as a PM at Robinhood. I was their second product
Yeah.
hire. And
Right.
I'd learned a lot. I'd seen a lot. And based on my experience at Robinhood and my co-founder's experience at Chime, we kind of stumbled into this problem as something that's really big and about to be bigger. So we had
Mm-hmm.
like that excitement, maybe the same excitement that you might have right now about your idea, right? We have this excitement, but there were so many more reasons not to do it than to do it, right? For example,
Okay.
like, okay, my co-founder saw this problem at Chime. I saw this problem at Robinhood, where there aren't that many companies like Robinhood and Chime, right? So is this a
Okay.
problem for the larger set of our client base? And our client base is banks, fintechs, and credit unions, right? Is that a bigger
Right.
problem? So I had to go validate that. Then I was like, okay, it is a problem for them, but how big of a problem is it? To Lottie's point, is
Okay.
it a, oh my God, like I can't live without this? Right? Or is this a nice to have? And like, yeah, I'll sleep at night even if I don't have it, it's fine. Right. So there's that.
Right.
And then at the end, let's say it is a need to have, right? And a lot of people have this problem. Well, how much money are they actually going to spend for it? Like it could be a need to have, but maybe
Yeah.
it's a need to have that's displacing a smaller amount of cost. So maybe the
Okay.
most they're ever going to pay for it is 10,000 or 20,000. And if that's the case, the way you actually scale a business like that isn't one that can necessitate people going, door to door almost and like talking to them. It needs to be a different type of go-to-market motion that has different kind of
Mm-hmm.
economics. So those are like
Mm-hmm.
the three questions that I really focused probably 6 months of our time on to even
Okay.
validate that this was something we should work on. And then once
6
we
months.
realized, okay, all of these things are true, can we actually get people based on designs? I used to be like a designer, like not the best one, but like enough to do
Okay.
prototypes. Can I actually go to people through my warm connections or through just outreach on LinkedIn with the right, can I get the right message market fit before even
Okay.
product market? Can I get
Mm-hmm.
right? Because like everyone's most precious resource is time. Can I get a meeting to even talk to someone about this problem? And then
Mm-hmm.
once I get that meeting, based on this, idea that I have, would they be willing to sign a pilot? Would they be willing to sign a letter of intent? Would they be willing to do something that's a little difficult for them, a slight amount of friction, other than saying, yeah, this sounds cool, right? Can I get
Okay.
some commitment where I would feel convinced that if I were to build this product, they would pay me enough money for a long enough period of time and be very happy with the outcome that this could be a lasting business that they tell their friends about, saying, hey, I don't know what I would have done if I didn't work with Casap. And that's what
Right.
I'm saying. My point around that's what I needed to do to be convinced myself that this is a
All
company I need
right.
to move on. You do all of this and you talk to most pre-seed investors, they're going to be pretty excited because I think it's the same thing they look forward to.
Of course. Of course.
What
Of
she has
course.
just described is how to start a company not like a tourist. Like she did the hard work.
Okay.
She did the hard work to decide, and then she did it, which it's the blessing of starting a company during a not bubbly time, and that you have to do
Mhm.
that because the investors do have a higher bar at that point. And now
So
it's different,
basically, okay,
you
go
know.
ahead. Sorry. Go ahead.
No, it's
So
market
now it's
environment
different.
now.
What?
It's different. It's
Tell
a
me.
lot. We see founders, starting companies in a month in an area that
Exactly.
they had no business starting a company in. They had
Exactly.
no founder problem fit whatsoever. And so, yeah, maybe that company grows to a few millions, but to have that deep customer empathy, like to really understand what the customer needs, you can't do that overnight. You need depth of relationship. You just need time because you
Okay.
need to talk to a lot of people. You personally, not like, you need to be
I
there in
get
those
it.
situations. And
Yeah.
she did that. And I think that's why that's honestly the main reason I was really excited about talking to her for the fundraise.
So all the fundamentals were there. Okay. Yeah. Go speak to your customers. I really understand their pain points. And also at the same time, try to understand if they're willing to pay for their product, right? That's also very important. Now, I made a couple of notes for myself. I will definitely use these insights when I am going and speaking to my potential customers because I have this plan in mind. Guys, so this is a question for both of you. Where do you think fintech funding is headed in 2026? Should we expect it to continue in this positive trend, companies being able to raise millions, if not billions, because I see some of the companies are raising billions of dollars? Or should we expect that AI will take all the money and the rest of the industries will be like, will go dry basically without any funding?
I don't have a crystal ball, but
All right.
the signs I see in the market is that there's a too much exuberance. So I
Okay.
don't imagine a world where things continue to get crazier than where they are right
Okay.
now.
Okay.
There will be a cycle. Things will there's going to be another fintech winter. And I don't know if it's next year or it's in 3 years.
Okay.
What I know is
Yep.
you solve a problem, you do that in a unit economics efficient manner, you're going to be default alive even when funding dries up.
Yeah.
Okay.
And
Got it. Shanti, what do you
what
think?
what I would add to that is from the founder perspective, like taking the highest valuation is not always, in fact, very often not the best thing to do.
Okay.
I have not always taken the term sheet with the highest valuation.
Okay.
Yeah, because if you look at what happened before, right, when we had our summer and then we had our winter, I have
Right.
friends who have to recapitalize their company. I have friends that have committed to a future that they had no business committing to. And now it's like,
Right.
they're hanging themselves with that. So I think what's important is if you kind of ignore some of the noise, like you said, the noise of all of this, and you really focus
Yeah.
on what is the fundamentals of the business I'm building today. What does the business look like, the business I want to build tomorrow? What needs to be true to really make that expansion? And what kind of funds do I really need? That I think should totally, I think the founder should actually be driving more of that conversation and be very clear about what is the minimum and what's the maximum that they're willing to take on every
Right.
aspect of the term sheet, right? And I think that's what's going to help, anchor some of this down. And I do think it's tough. Like imagine you're a founder with an okay idea, but you got, the right, a lot of money, this and that. 2 years later, we get into a winter, you realize your business didn't have the right fundamentals. I feel
Mm.
bad for that founder because, yeah, maybe they had a splashy 1 month or 2 months, but they just
Yeah.
spent 2 years they're not going to get back working on a business that they're probably not going to be seeing through. Right. And I personally, that would be so devastating for me. So,
Right.
yeah.
No, I mean, it's always very, very tempting to get the highest valuation. I'll be honest with you guys, but I think it's also tempting for most of the founders. But thank you for this insight. It's not always like the good idea to take the highest valuation. No, guys, thank you for this conversation. It was really pleasure speaking to both of you. It was really great to get the insights from founders' perspective as well as from the investors' perspective. I hope my audience will love this edition, and I ask them to stay tuned for more this type of insightful conversations. Thank you very much.